Light Forex broker, guys, welcome back. Our market analytics weekly program. I'm Ray Kuzing. It's great to be back. And today I want to have a direct follow-up on the Euro Yen. About a month and a half ago, on the 31st of January, I had the first session on the Euro Yen where I was basically establishing a bullish conviction. However, I did not pull the trigger yet. I was ready with my finger right there, but I was conditioning the situation with a break of a particular key level that was my official trigger level. And so it's been a month and a half since then. I want to go back and see what happened and obviously share with you my journey. It was quite a journey up until now, and obviously I'm still pretty involved with the Euro Yen, so it's going to be really interesting. Let's go ahead and dive in. Alright guys, so before I move on to our main theme of today, the Euro Yen, I want to talk a little bit about the dollar Swiss. Just a week ago, I think it was about 8 or 9 days ago, I came here and I declared a bullish position that I've established on the dollar Swiss and a bullish conviction that I'm going to hold, and we were right here when price was just spiking here, that neckline. We had that pretty impressive head and shoulders pattern, right? Very shallow kind of shoulders, followed by that massive head, right? And then came the break, but we also saw that downside correction. But what was really impressive was that spike here, that not only spiked that neckline, but also that blue dotted line, which represents the 38.2 Fibonacci correction, very important key level. And that's pretty much where I pulled the trigger and came here to share that with you guys, right? But I also specifically mentioned a secondary price target, very important key level, the 101.17. And I also said that I plan to use that level for partial execution, but eventually I plan to ride this bullish trend, hopefully all the way to 103.40, right? So you can see what happened, guys, right? When price approached that 101.17, just as it did last time, and to be honest, I was really expecting this, right? So all I wanted to see, I was hoping for, a clean-cut break. So price would not react to that level, just continue on the way up. Unfortunately, that was not the case, and when I noticed that close, take a look, I'm going to close in, right? Price was spiking slightly, boom, closing just below, I got out. Basically, I got, well, almost out completely. I took most of my position out. I left just a tiny part because I still want to, try and ride out that move, which I believe will eventually continue and break, have a successful attempt on that 101.17. But at this point, it's hard to say how deep the downside correction is going to go. I have a suspicion it could go straight back to that blue dotted line, right? That same 38.2, maybe slightly touch base again, right? Retest that key level, which is also really nicely colliding right now with the neckline. So I'm going to be waiting for price to come back all the way here to pick it up again and try to get back to the original plan, chasing all the way to 103.40. But up until now, we had a pretty successful move to 101.18. I took most of the profit off the table, left a tiny part in, so I'm still basically in this position, and I'm still holding this conviction. Now, I just wanted to, quickly touch base on this, but hopefully we'll have a full session about the dollar Swiss in the foreseeable future. So let's go back. So basically, let's move on to our main dish, right? The dish of the day is the Euro-Japanese yen. A month and a half ago, guys, we were right here. Let me show you exactly where we were. That was the 31st, right here, 31st of January. And what I showed you was a very impressive big picture. Remember that? I was showing you the weekly chart, and on that weekly chart, not only that we have a pretty well established trading range where we already counted 4 legs, but on top of that we have the ideal setup, really this is the top level, bullish setup you can ask for, because not only you have 4 well-established legs, but the 4th leg was really unusual in its nature, because it went so strong on the downside. It was so overshooting itself on the downside that it completely crashed the previous lows, right, by a huge margin with that spike. But the fact that price came all the way back, left that huge spike, came all the way back just to close in and validate that setup was incredible. And then of course came the turnaround. So it was quite obvious to me that we're about to approach the 5th leg. In this case, it's going to be an upside leg, all the way back to the higher section, starting with the level. This is the minimum level that we should expect price to hit, 130.24. And obviously, when we talk about this trading range, every single leg here is the medium-term cycle, right? So this is a big trend, right? It could take a few weeks up to a few months for price to complete a full leg. Now, so let me go back again to the moment, 31st of January. If you haven't seen that session, go ahead and check it out. By the way, the title was FX Market Watch List, Euro Yen. Simple as that, right? Go ahead and check it out, 31st of January. We were right here, and I was ready to pull the trigger, right, because of the big picture and everything. But I was also noticing this local trading range, which represents the short-term cycle. I noticed price was starting to trade sideways in a very, very narrow range, right? I was able to pinpoint that with the matrix, the blue setup. So when price was about to break 125.49, right? My condition for establishing a bullish position was for price not only to break that key level from the daily perspective, right, because that's not reliable enough. I actually demanded to have a weekly close above that key level for a confirmation, right, for a confirmation process. So when price was actually just, I think it was just the next day, a few days, probably a couple of days later, after that session we had on the 31st of January, price actually broke that key level, but it did that only from the daily perspective. We only had a daily close here above the 125.49, so I was not rushing into establishing a position. I basically waited a couple of more days to see how the week is going to end, and let's see how that ended, guys. Take a look. I'm going to zoom in. That's pretty much the moment that we're talking about right here. So price came back, and on Friday it actually managed to close right in, right below that 125.49. And obviously that was not a good sign. It kind of suggested that price was acknowledging that level as an important resistance, and it's probably going to hold, at least from a temporarily point of view, and it's probably going to continue on the downside, playing out that narrow trading range, that blue setup. So I stayed on the sideline. I didn't get in, and I also noticed that the following week that price actually started again on the upside, but quickly capitulated, left that spike, and began to drill downwards pretty intensely. Now I want to show you what happened later. There were really interesting developments later on, because when I was noticing that downside move, I expected, as I should have expected, every trading range pretty much behaved the same way. So I was expecting price to land at the lower section, right? I was expecting that because I wanted to pick up the Euro Yen once it was, coming to that, toward that lower section. At least I was talking about the level of 123.79, and I was ready to pick it up. But instead of completing that downside move, what it did, it turned to the upside, right? Approached again that 125.49. Right, I was watching this very closely every single day, waiting for the right moment to strike. And then I noticed something quite interesting happening. I was still expecting price to complete that downside move, but instead, it completely failed. Take a look. That was the moment I pulled the trigger, guys. Basically, I jumped the gun, you know. I kind of entered prematurely, but I was using that very element that I'm showing you right now as a trigger. Instead of respecting the original trigger, 125.49 from a weekly close, from a weekly perspective, I noticed that price failed breaking below 124.69, and it did that quite obviously here with that spike going all the way back, closing right above, just on that spot basically. So I thought to myself, man, this is, you know, this failure to break through is a serious indication that price is actually about to have another attempt on that 125.49 top resistance, and it's probably going to be successful. So now let me show you again that weekly chart just with regards to that same moment. Take a look. So we're talking about the fact, right? You take a look. This was the first, well, that was actually the third attempt that failed, right? That was the third attempt that failed. That was right that moment when price was beginning to move. This was it. Take a look. That was Friday, and then came the break. But basically, I pulled the trigger as I noticed that spike here. Price was, you know, failing to break below 124.69, beginning to turn around. I got in. I got in small, and then when price began to break that 125.49, I increased the position a little bit. Then, of course, price broke above that major key level and the main point of reference, actually 126.35, and I just kept increasing the position. And at some point, price began to turn around, right? And when it began to turn around, I began to scale out. Basically, I started to close my position and taking profit from the first and second portions that I got in, which were relatively low. And then I noticed that price was coming right back to that 126.35 and having a clear reaction. So when I noticed that spike here on that key level, what I did was I moved my stop loss level, at least for the rest of the position that I still had in. I moved the stop loss level very close to that spike, and the next day I was stopped out. Altogether had a relatively small profit on this one, much smaller than expected, right? But I figured out that, you know, that was pretty expected, to be honest, because ever since, if you think about it, ever since that tip of that spike here, guys, right? You think about it, this was a very hectic and swift move, but in fact, the tip of the spike represents the beginning of this upside move, this upside segment, if you will. So if you think about this whole move as one unit all the way to the top, effectively speaking, we did not have a serious downside correction, right? So, you know, that was pretty expected, right? That move, that was a typical downside correction. I was a bit surprised, to be honest, by the sheer intensity of that single day here, but I was also pretty, you know, hopeful. I mean, I was pretty interested to pick it up again, to come back in and complete, you know, the mission, which was taking price all the way to 130.24. So I was really impressed to see the reaction we had on that mid-high key level again, 124.69. Take a look, right? Really nice stuff. I mean, you can see the first touchdown, then of course that spike. Price keeps, you know, keeps respecting that key level, right? And then another attempt to break below, failed, just a spike then again, and price reverses and begin to move upwards. So I really felt that this was a downside correction, and it is over, right? So we're back on the upside. We're resuming the original upside move, because the medium-term cycle, as I've said before, is on the upside, and it started right here with that tip of the spike. That was the moment that the medium-term cycle shifted from a downside trend into an upside trend. Now, I got in again, right? I got in again, and when price, a couple of days ago, when price broke again that 125.49, I actually increased, I doubled down, so to speak. and increased my position. Now I'm waiting for the critical moment, guys, because you can actually see it right now as we speak. You know, this is why I thought it was a perfect timing to come back to the euro yen, because right now we're in a classic make or break situation. Once again, that same critical key level 126.35, and you can see the reaction we're having right now. Now, if I'm reading this correctly, right, and this was indeed just a technical correction, then price should have no serious problem breaking through that 126.35, right? Because if we're resuming the original move and we just finished a downside correction, price is is obliged to continue on its way up. However, having said that, I will respect that key level because it's a mighty one. Let's take a look at it again from the weekly perspective. Check this out. So now you can see how price is settling right below that key level from a weekly perspective. But let me show you something. I actually showed you that. Well, you know what? I'm not sure. Maybe I did, maybe I didn't. I don't remember why. I want to show you something really remarkable. Take a look at this, guys. This is why I think this is going to work. Very good chance that we'll see that, that expected move all the way to 130.24. So now I'm taking you to the big picture, the monthly chart. This is the same setup, guys, same key levels. But take a look what happened here last month. Well, I'm talking about last month, of course. I'm talking about February. Take a look at the close of that month, 126.63, right? Well above that 126.35, and that is very important. This is a monthly close, the highest authority, right? Breaking that key level, that's usually a genuine breakout. Usually, like I'm talking about 90% of the time. Now, this month, what happened here up until now is quite remarkable, right? And let me take a guess here, just a calculated guess, so to speak. My bet is that price will end up the month, right? We still have about 2 weeks to go. It will not only, well, it will end, let's just say this, it will end above 126.35. It would close above that key level. Not sure in which way, if it's going to be really strong, right? It's going to end up like, very positive, or just slightly positive, maybe even a dodgy, but it will end up above that key level, leaving a huge spike here, which is already revealing, right? Up until now, 2 weeks time, price was already here, guys, at its lowest low, 124.27, more than 200 pip below that key level. But as the month progressed, take a look, this spike starting to show up, and we're very close to that key level again. So my guess is we're gonna close above that key level. But more than that, I think that's that speaks volume. Right, that speaks volume on what's to come. I think we're going to be successful on this journey on the way up. But like I said before, I'm going to be respectful for that key level 126.35, which means that I still hold a relatively small position. Only 20% of my usual position size is in. So I'm saving most of the, volume, most of the power. I'm saving for the breakout. For it, I would, just a daily breakout would be a nice start, right? The daily close above that key level would be a nice indication that we are on the right way. I'll probably top it up a little bit, but only once we have a weekly close again above 126.35, that's when I'm going to open fire, right? Like really seriously open fire and bring up my position as high as I can towards my 100%, and try to chase right out that move all the way to 130.24 by judging what we had up until that correction, right? If I take that whole move from the very tip of that spike, right, I can easily see a smooth, right, without any major downside corrections along the way, just a smooth move, straight liner, so to speak, all the way to our final destination, 130.24. Should be really, really fascinating, guys, to see how this is going to unfold. Hopefully, I'll come back in a month or two to follow up on this one and see how things played out. But it's really interesting stuff. All right, I think that's enough for today, guys. I hope you enjoyed that session. By the way, we're taking a bit of a break, a couple of weeks. We're taking kind of a vacation break, so we're going to be back here. The first session we're going to have next month, April. So at the beginning of April, we're going to be back. Probably following up on the oil, guys. I owe you a follow-up on the oil because it just broke. It reached our first price target, but now it broke it. So it continues to hammer towards our second price target. Guys, if you haven't watched the video, go back, watch the oil. We actually had 2 sessions, maybe even 3. But just check out the last one, right, where we were just approaching the first price target. So yeah, I'm going to probably follow up on the oil next time. That's about that for today, guys. Till next time.